Bro, Bitcoin's looking like it's gonna break down.
Yeah, it looks. We are on stream. Um, Yo, this is the 2K1A play-by-play slash little news update. My name is HT. That's Danny. So you were saying that BTC is breaking down, Danny?
Yeah, it looks like it's doesn't look great to be honest. It's playing with the support that's been, in place since early June, mid-June. So if we break below this, and you can see the triangle kind of momentum just waning, and
Yeah,
it's looking like it wants to break down. It's holding on by the skin of its teeth right now, but we could see it. We're definitely very close. We're like 90% towards the apex, and we're gonna get a move. It's just whether it's a move to the upside or the downside. That's all. We just gotta wait on.
yeah. It's just emming out. It just keeps emming out. And
Yeah,
honestly,
it looks.
I was looking at the monthly last night, and it looks like a harmonic on the monthly wants to kick in, as well as um, a flag. Give me one sec. Yeah, it just doesn't look good whatsoever.
Uh, you can see the volume just collapsing. So it doesn't look like the buyers are going to step in and support that level. So and you can tell from the markets today it's been quite red with a couple of exceptions here and there, but overall looking very bearish.
Yeah, horrible, horrible. But hey, good for us though, 'cause we are looking at you know that 12,000, $10,000 range. So
Yeah.
on the monthly,
Yes.
it
Still waiting.
looks yeah. There's a nice horizontal support and resistance on the monthly right there. Oh, I haven't shared my screen with you, have I?
Nah, you haven't. But that's okay.
Uh-uh.
I can still kind of grasp where you're
No.
kind of going with this.
Um, so today is going to be a quick play-by-play. So we're actually just going to show you what we see. Um, what was the ticker for silver? SL
SI1
SI1. That's right.
exclamation mark.
So yeah, guys, we're just going to do a quick, example of what we would look at if we
You
were to
wanna do you
trade.
wanna share your screen as well?
Yeah, I will share my screen. Oh, what am I doing? Boom, bang, bang,
Yeah, sweet.
bang. Okay. Let's go daily.
Oh,
And
why are we doing? Oh, you have to do daily. Nah, it's okay.
uh, actually, should we switch it off to you then?
Nah, that's okay. It's okay. For today. Let's just do a daily.
Yeah. Because unfortunately, I don't have the premium trading view. So what we'll do is we'll just go on the daily and we just scroll all the way back. Time frame doesn't really matter. I mean, the setups are the same. You know,
Yeah, but
the theory's the
once
same.
once you've got all the setups worked out, it applies to all time frames. So that's the beauty
Exactly.
of the technical analysis right there.
Exactly. So yeah, 15th December, 30th of December 2015. We'll
Yeah, why not?
start from there. And this is what we have here. So, what are you seeing here, Danny?
It's not looking too great, to be honest. Looking like a
No.
downtrend. Um, yeah, you can see the Bollinger Bands expanding there.
Yeah. It kind of also looks like we're making another A, B, C, D. So let's see
Yeah,
here.
pop that on there.
So bang, bang, clone that.
Yeah, good spot there.
Boom. It's also a bearish flag. So if you guys look here, so there's one downtrend, and then we go one, two. It's a little bit short, but three, four, five, and then down. Um, Is that technically correct, Danny, or
Uh,
it could
in
be a
terms of a
stretch?
yeah, look, I think it's a bit of a stretch.
Yeah,
It's got to be a bit more cleaner than that. But it's still it's still an ABCD move.
yeah. And it looks like we're actually oh well, we're not technically oversold yet. How about we play the bar a little bit? So we'll go. Oh, this is new.
Oh, I like that. That's very nice. I
That's
like how
good.
they've done that.
Yeah. Um, First thing I would also like to do is look further left.
Yeah,
Uh,
that's you know what, and guys, that's always a great, starting point or a great. It's just great to have that idea in general, guys. Just look left.
yeah.
If you don't know where to begin, look left.
And why do we do that? The reason why we do this is that we can see where whether our location is a good location to enter a trade. So here we've drawn our Fibonacci um, retracement, and look here, like the top was at $50, the bottom was at 8, and we're at 88.6% retracement. You know, we've tumbled
Yeah,
all the way down, so we might find what? Uh, well, actually, we're testing this Wyckoff check here. Well, it's actually we broke down below it
I would also say the Wyckoff checks at 10,
at 10. Ah, right here. Where?
10,
Here?
$10,
Where?
$10. So yeah,
Oh,
that one
here,
there.
here, here. Yeah, yeah, yeah. Boom. Another good thing to look at here would be an institutional fingerprint. So whether the whales have forced the market down and then caused this surge. And not really.
Well, I mean, you can't. Yeah, no, that it is there.
Which ones are you seeing? I'm seeing this one.
No, no, the very previous low.
This one here.
Yeah, that's the institutional fingerprint, and
That's
then
the
the bar preceding that.
and this one here.
Yep.
Aha. Okay, so we can highlight. We could even do another ray here. So we can expect if these big institutional players wanted to come back and, reload their position and get more silver, they'll come down, they'll test this level.
And it's not a bad idea to look at gaps too while you're there.
Oh, you're right, actually. I completely forgot about that.
To be
Uh,
honest, they
it,
look mostly filled.
and it's a little bit harder to find gaps on the daily, but they're still there. Uh, yeah, nothing really. Everything has been technically filled now. Yeah. You seeing any? I'm not seeing any.
Nah.
Alright. So now that we've done that, now that we've drawn our, if we decided to enter this trade, are we at a good position? And a good position to look out for, for me personally is 61.8% retracement all the way down to 88.6. For me, this is my reload zone. Some people like a tighter reload zone, a 78.6 retracement, or some people even do 72%, like up here in the midpoint here. What do you like, Danny?
Uh, Look, I'm pretty flexible as long as I've got, at least a 61.8% retracement. I'm happy to look for things. For me, it's how I feel at the time, and there's so many different variables and situations that you know make me want to enter a trade. So it's not just the location. The location is definitely the most important.
Mm,
But that is definitely my first starting point, and then I'll zoom in, I'll dig in, and look at the internal indicators as well, just to give me some
yeah,
extra feedback.
yeah. Well, that's another thing that I like to do as well. Um, I don't know if you like to do this as well, Danny, but I like to, if I look left and draw a reload zone, I might as well enter. like a little ray here, a trend line, and
Yep.
just see where my possible breakouts, where my possible targets might be. So here it looks like we've broken outside of this trend line. This is a confirmed trend line, guys, because we've got the left shoulder of an M down, up, and then confirmed
Breakdown
here
past the midpoint.
past the midpoint, which would be here. I'll draw it for you. Boom. This would be the midpoint. So that's the M. Boom, boom, boom.
Perfect.
That's the M. Okay. So now that we've done that, um, let's look at our indicators. So one we know again. Let's reiterate this point. Um, we looked to see whether we have good location. Are we at a good price? Are we entering the is the market has the market brought the asset down to a good price for us to enter? And clearly it looks like yes. You
And a
know,
good analogy there is, are we kind of like deep down in the bottom of the ocean, or are we on top of a mountain, or in the middle of nowhere in the desert?
exactly.
So just think about where you are in terms of the price relative.
Here's the mountain and here's the ocean. So, and we're here. We're not in the desert. We're not here in the middle.
Yeah, you're not in no man's land, so we would say that 50% mark is kind of no man's land. You
Exactly.
can still make trades off of the 50% mark.
Hmm.
It's just you want to be on different time frames and you want to be looking at it at a different angle.
Exactly. And it's and you like you said, you can trade this here. However, you want to trade it, well, at least for me, at a more smaller time frame
Yeah, and it's
because it'll
more,
be
and you
more
can think about
volatile.
it more of a bot as well. You're entering bot territory where you need a certain amount of lows
Yeah,
to come in to support that, that 50% mark or that 33% range to 60% range retracement.
yeah. So now we know, okay, well, this is a nice W here, and it's broken below this. It's broken below this midpoint. So now we know this midpoint is going to act as resistance. So now let's take a further look. Did you want to add anything here, like another more analysis?
No, I think we're pretty spot on at the moment, and it's just a daily, so it's gonna move quite slowly.
Okay. So now that we've done that, let's look a little bit further and look at that. It just wants to keep going, which is, aha. Now this is interesting. We're getting a big jump. What do you see here, Danny?
Look, not too much at the moment. For me, I'd personally wanna wait to see how this ABCD resolves.
Yeah. Okay. For me, this is a little bit interesting here. It's kind of a inverted head and shoulders. This could be a short-term surge. You know what would be interesting if we added OBV. Um, yeah, OBV here as well.
Looks like that's like an OBV with Keltner channels or some type of
Um,
um,
it's
Bollinger Band on it.
it's I forgot
Oh, it's just
what it was.
EMAs.
Yeah, it's
Okay.
just EMAs. Um, so yeah, nice W's coming in here. But in terms of divergence or any momentum indicators, nothing too clear. I mean, we did get W's here. So this is your M, your second M, your third M, and now we got this W. This W kind of slowed down the selling pressure. Well, it's indicating that not many people are selling. Let's look at the price action here. And clearly, look here, not many people have decided to sell here. So that's one, two, and then a bigger. You could call this a bigger M, and then we've got a W, and then more W's in between. Another head and shoulders pattern here, but nothing too um, solid as of yet. So
No, not even any divs in the MACD.
yeah, so let's keep going. And
Yeah, I had a feeling it would that's how it would react.
it'll respect this harmonic. Mm, interesting. So we're kind of getting, if we actually put on the Bollinger Band, we'd see that we're tightening here. We're constricting here, and you could see it
The MACD.
with the MACD. We're kind of coiling. So we're coiling in the MACD. Boom. So there is some indecision in the market here. You could see it with the RSI as well. See how it's floating around the 50 mark, and the Bollinger
Yeah,
Bands around are also constricting.
and that HT, that's a great great use of the word indecision, because
Hmm.
that's what it looks like to me. There's a bit of indecision in the market, and you can see the bull and bear fight
Hmm.
happening.
Yeah, so let's go through and see who's gonna win this little battle. So
I feel like we still have to resolve to the downside, but look, definitely see
we're
a
getting
rally back up to 15, 15.5.
mm, it looks like we're getting a little bit of a little W here.
Yeah, I think if
Oh.
there was a trade, it would be, take that small range and take profits at 15.5 and
Well,
take you.
a lot of people actually trade using this Bollinger Band during the a ranging market. They'll actually enter this type of trade, a confirmed W, wait for the breakout, and then once it hits the upper Bollinger Band, they sell. That's their indicator to sell, because usually, if you see here, it touches the upper, and it just breaks down below. It tests the lower Bollinger Band, and then it likes to range in between. Touch, falls down, goes up to touch it again. Um, but nothing great yet. Boom. Aha, very interesting. Let's see whether this uh, horizontal resistance, gets respected. Boom, and it does. What are you seeing here in the MACD, Danny?
Feeling like that's just broken out there, so
Yeah,
there's a bit of room to the upside, probably not too much.
I'm seeing W's.
Yep, that's it.
That's a nice little W there. More little W's in the middle. Big W here.
Only
That's
potential.
a potential one. If this one breaks out, then we could expect it to go above this horizontal. Um, the RSI does look juicy to me, honestly. So I'm getting one W, two, what? So one big W, one in between, three in between, four in between. And it looks like here, if you look at the Bollinger Bands, they've constricted here. Let's see what this point is. Here. That's that point here. It actually told you that it's gonna pop up a little here as well. Are you entering here at all?
Nah, to be honest, I mean, if I was on a different time frame and I could zoom in, probably, but at the moment, just on a daily itself, I'd like to wait.
You'd like to wait. Okay. So for me, I want to see one more W on the price structure. If I go up above here, then I'll be happy to enter. Let me get rid of these. Actually, no, I'll leave it. Oh, thank God we didn't. That's a nice empire here as well. So clearly it doesn't want to go break past this horizontal resistance. Very interesting. That's nice. Um, my only problem is it didn't break this midpoint. So if this was a nice W, it would have gone above this column here, but it actually was lower. So it looks like we're still coiling. What do you think, Danny?
Yeah, look, I mean, I could tell it was a mid, it looked kind of like uh, a half-assed kind of consolidation, um, just breaking up to the upside, and it didn't look like it had too much weight behind it.
Mm,
And like I said, my if I was a bull, my target would have been about 15.5. I think that's the extent of my that would have been the extent of my trade if
mm,
I did take that.
mm. Well, let's see what happens next. Wow,
Yeah, so
okay.
there's your target there at 15.5, and that's where I would have taken profits.
So that's very nice. I would actually enter here, and I would do, so if I would have entered here, I would have gone down to the low of this empire and taken it up to a 2.
I feel like for me that's a bit risky, but could definitely still push higher because you
Mm.
can see that the momentum's kind of shifted now.
So let's check the Willy. Uh, Minus percentage R. So we have W, 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 and we're entering the overbought region. So let's see what happens. Interesting. Oh no. Oh no, that's an M here, a second M, and another M through the 50. It doesn't look good for us, guys. Well, never mind. Look at that. It actually reversed up. It's made another W through the 50 mark. This is looking promising, and we're still in div range.
Well, at this point, it's not a div anymore.
Oh, it's not a div anymore.
Yeah, why is that?
It's not confirmed.
No, it's what do you need to see in price action?
Oh, excuse me. It has to go lower. So price has to go down, and momentum MACD has to go up in terms of selling pressure. Lower in terms of selling pressure. So let's see. Hmm. And this would be like a good talk about deciding to enter at scratch. Sorry, exit at scratch. Because during this, if you're actually trading this, and you always reiterate this to me, Danny, you're like, yeah, while paper trading, this might seem okay, but in the moment when you've actually put your money um, on the line, this is terrifying. This having this dump. So,
Oh yeah, and you know any rookie trader, even I've made that mistake before, where you see a breakdown like that, and you just decide to get out, and then you watch 10 minutes later, and it's just reversed, and it's just hit your target, and you're sitting there going, why? and
mm,
and and, and at that point you've already kind of your mental is kind of switched. So you got to keep that's one of the things about trading is you got to keep a switch on in your mental, and you always need to be alert and be mindful that you're making the decisions that you've got in your head, and you got to follow that plan through, and it's all about the process, guys.
exactly, exactly.
And look
Because
at that, what a trade.
great trade. And you were 100% right. It that was a really risky trade because we basically got in at the third W there, or even the fourth W. There's heaps of W's here where you could have entered, but for me, like ideally, this would have been my entry.
Yeah.
This would have been perfect entry. But this is hard to see, or even here would have been a great entry. because boom, nice W. But
Hey, I
again,
mean, a win's a win.
a win's a win, and this is just subjective to how I would see the market. Again, for you, it's completely for you listening, it's completely different. You know, all this game of trading is not about testing markets. It's about, like what Brian Beamer says. It's about you. It's about, understanding who you are. So some people are really risk averse and they'll just, hey, I'll enter here, boom, and see what happens. Others are really, cautious and I want to see, four reasons for me to enter. I want to see. That's ideally what you should do because that's technically the process. Or three things that are completely different but are telling you to enter the trade. That's ideally what you want to see. But some people are like, two is fine. Two reasons for me to enter a trade is fine.
And look, for some of the rookies out there, the way that they'll see it is that, it's them versus the market.
Mm,
Where in reality, the market's going to do whatever it wants. It's like nature. Is it really you versus nature? Because nature's always going to be there. It's always going to do its thing. It's a matter of it's you versus yourself.
exactly.
So, and it's how you approach these things. Because, nature's always going to be there. And the only variable that you can control is yourself when it comes to decision making and all these decisions that you make. Because nature's going to do its thing, you know? It's you can't control it. So you might as well control what you can, which is your emotions, your decision making. And so that's where a lot of people go wrong, is that they'll try and put blame onto something that they have no control over. You can't tell the sun to not exist. You can't tell the winds not to blow. You can't tell the rain to stop. It's gonna do whatever it wants.
Mhm.
So
Mhm.
that's just something that it's a shift in mindset. And once you've passed that road, that bridge, you'll see it from a different perspective.
Mhm. No, very well said because and you've told me this point multiple times that the game of trading and the analysis of markets is not the analysis of data per se, but it's actually the analysis of human psychology. What people view as value. That's what, you're studying. You're not studying all of these numbers and pluses and minuses. No, you're studying what do people deem as valuable and what are the people that have the information think. What are they trying to tell me? This is all like Morse code, you know, and you're trying to discuss with people how they feel, and each
And
person is reading it differently.
and a point I do want to make while you're on that point is, patterns. That's the one of the main things that people look out for is pattern recognition. Is because the way that the mind works is you think that the mind's complicated, but there are ways that like how you can read emotions and how you can read all these different things in psychology, you can read the markets in that way where you look for certain patterns because the human psyche is a pattern itself. The human psyche is actually quite predictable if you study it enough. And obviously you got to be quite in tune with psychology and the subject matter. But once you're in tune with it, it's actually quite predictable. And that's why people look out for patterns. And that's why patterns become this very big thing in trading, is because it's something that, you know, we can read. Um, so yeah, I could go in more in depth with it, but obviously I'm not that well versed in the subject matter. But it's something that you got to pay attention to is these patterns,
Yeah.
and that's what you use when you're trading. Is you'll try and find certain patterns that align with what you've seen before.
Mm. Well, we're like pattern recognizing beings. That's a function of our brain. What it's something that is encoded into our DNA. That's how we, got to where we are as a human race, as the human race. So,
And that's why you see the Fibonacci numbers come up time and time again in
hmm
nature, is because it's something that nature, it's it's a nice pattern for nature, is
Mhm.
to always follow this Fibonacci sequence, and that's why I talked about this with page T the other day. Is your the way that the human body is constructed. It aligns with patterns respective to Fibonacci sequences, and you'll have things like the length of your arm and your elbow. If you divide that, it's actually 0.618. If you divide the whole length of your arm by your elbow and things like that, um, you'll always find patterns in everything in nature.
Exactly, and it's everywhere. It's the distance between your eyes. It's the distance between, your ears and all. It's crazy. The distance between flower petals. You see these numbers everywhere in nature. So there's no. Why would you say that it doesn't occur in this type of analysis? Because this type of analysis, like Danny was saying, is the analysis of nature. And we happen to be a part of nature. And who created all of this? Human beings did. So interesting. I want to ask you a question here, Danny. If we are at the 88.6 level and price decides to shoot up, would the 78.6 become a resistance point now, or would it
Well,
be?
that is a great question, but I would say that it depends. Um, it depends. And look, I would say whenever you see a breakout like we're seeing now, I would just say look left. Look left and see where the resistances are.
Mhm.
And the one resistance that stares at me is about just below 20. I would say $18.
Here,
A bit higher.
here,
And if you go to the right a bit more as well.
here.
No, like way to the right. Yeah. So I
Oh,
would look at
here.
these Yeah, I would look at
Right,
those
right,
levels
right, right.
as resistances moving forward.
Mhm, mhm. Well, it's interesting. It got rejected here as well.
Yeah. So
Yeah.
look, I'm expecting it to hit 18 and then reject.
And I just want to see whether this is a 50%. No, it isn't.
No, why are you taking it there?
Should be here.
No, take it to the other low, to the very low.
Oh, to the very low here.
Yeah.
Yeah, yeah, you're right, you're right.
And I would take that back. Yeah, back there. Yeah,
Hmm.
that makes sense.
Around the
Somewhere around that region.
Hmm. All right, let's do one
And
quick
you know,
one.
if you guys, I actually want you to chuck on a VPVR just while
Yeah.
you've got that there, because I believe that we're gonna get some valuable information from the VPVR here.
Here. And let's.
You can just go back a couple of more bars.
Unfortunately, let's see. No, I can't go further than that, unfortunately.
Ah, that's alright then.
Yeah.
But you can see that there's that gap there.
I can change it to a weekly and see what happens. Here.
Nah, it's too much.
It's too much.
We were looking at a different frame.
Actually, we can do. How about we do 200 here? The next 200 bars.
Oh yeah, there's a node there.
Yeah.
Yeah, that makes sense. Yeah, there's a nice node there at 1920.
Yeah. Well, let's see what the price wants to do next.
You
And
could have even changed it to a 4 hour, but that's besides the point.
actually, let's do that. Uh,
Oh, never mind.
I'm waiting for November. I will get it. Trust me. Okay. Where are we? Oh no, it took us all the way back. God damn it. Yeah, so this is why you need here we are. Da, 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 da. Oh no. Bang. Here. You didn't see it, did you?
Nah, I didn't see anything.
Okay, good. There we are. Okay. So let's keep going. This is nice. W through the 50 mark and another W. It looks like we want to keep going, and we've got no, we've got lower sell pressure. We've got a nice big W on the MACD. So boom, 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 boom. Let's keep going.
There you have it. Rejection straight off
Rejection
of that. So remember we drew that resistance at 18.
right here.
So that's why you look left, guys.
100%. So valuable. This is so valuable. You do not understand. This is so valuable because most people don't see this. They think, "Oh, we're mooning. Yes, to the moon." Meanwhile, it's telling you right here that there's going to be an issue. So always look left. Okay, let's see. And look at that. We've M'd out, guys. So you could even enter a short here. Boom. Take that. You can even take it. Let me change this to a fib long. I like to go to this level here. Take it. I'll actually keep it at this resistance point and go back down and test. You know, this is technically an institutional fingerprint here. So you could take it down here to, yeah, we'll go safe and just go to, which is a what? Yeah, right there. Um, what would you do that, Danny, or how would you perceive this?
I can see why you would take that. Personally, I wouldn't. I would just leave it. But you can definitely take it.
Let's see what
It's definitely
happens.
valid. So far, so good. Now, when something like when a trade goes so well in your direction, sometimes you do have to just be mindful. But you know, sometimes it just it'll just hit your target
Yeah.
right there and then. So
One th
uh,
one thing that's worrying for me is whether I'm keeping my eye out on this here, this little hump. If it's going to make a midpoint and another hump, it might make me say, oh, okay, maybe I should stop at scratch. But we'll see what happens. And there we go. This is why I love the RSI. Now watch, because it went through the 50 mark, I would assume it's actually gonna we're gonna get stopped out. Look at those Bollinger Bands just continue to expand. And it's making another W. Boom, we got stopped out.
yeah, look, I probably would have taken the stop loss run there. I would have
Here,
taken that trade up. No. So
this one here.
right, the candle right now,
Yes,
I would have taken that short.
this short here.
Yeah, because it ran the stops.
Yeah, and you're absolutely right because look here, it also rejected here. So let's see. So let's enter this Danny's trade. Boom. You would enter at the resistance mark.
No, I would have set my sell
Yep.
at the where you had your stop. I would have set my sell there.
Oh, okay.
No. Where you had your stop. So
Uh,
no. My entry is your stop.
your entry.
My entry, my short,
Oh,
is
is
where you
here.
had your stops. No. Where you had your stop loss. Where was your stop loss?
Here.
No. Your stop loss, not your take profit.
Oh, my bad. My stop loss was here. Um, and where was your entry?
At your stop loss.
At my stop loss here.
Yeah, right there.
My
Yeah,
bad.
there you
My
go.
bad. My bad.
So,
My bad.
guys, I do want to stress this in when it comes to day trading. So the rookie mistake is to take a trade like that, where you would. So, this comes with experience, guys. When you see an M structure, it depends on the time too, but in this case, it's a bit hard to tell the time, but that's fine. But basically, you see a lot of players, they'll hunt for shorts, basically where people put their stops. So
Yeah,
it made sense why the market dipped up into there and then reversed right away.
reverse down. So where would your exit be? At the 38.2 or at the 50 mark?
No, my exit would be yeah around there at 16.305.
Okay.
Yeah, it's a nice 3 to 1 there.
And the stop loss is fine
Yeah,
here? Yeah?
yeah. You know what? I would put the stop loss at the um, previous high. Yeah, right there.
Right here?
No, but yeah, right there, right there. Yeah, right there.
Okay. Very tight window.
It's a bit, yeah, it's a bit risky, but it's doable.
Let's see. Let's go. I
What's
like.
the risk reward there?
So you've got a 5.5.
Yeah, it's
You're
pretty risky.
risking 1% for a 10% gain. So let's go. Wow.
Ooh, so there you go. It
Mm,
ran that stop too.
it ran that stop as well. That's
So
so interesting.
yeah, and look, I'm pretty sure it's gonna reverse right from there.
Let's see what happens.
If it doesn't,
Oh,
oh, there you
wow.
go. That's why you got your stops.
Wow. Wow. And
So it
look, it
just
hit the 50
blasted
mark.
past it.
It hit the 50 mark. I wonder if it's going to reverse off the 50. Oh, we've got a inverted hammer. That's so interesting because look at that, man. This W was telling you. Boom. And then it made a bigger W within another W. So that's one W through that 50 mark, two W through the 50 mark. And it's constricting again. So we might actually go one bar higher or we start making an M. And there you go. That's interesting. I wonder what that level was. It hit 61.8. Such a powerful level, the 61.8.
There you go. That's that fractal Fibonacci nature coming in.
So I know quite a few people that actually like to hunt shorts at this 61.8. So we could have, like in hindsight, could have changed this to, from the 50% rule to the Fibonacci and just waited, you know, if it broke out, just waited until it hit anywhere in this level here, like we did down here, guys. You know, with the reload zone in the 88.6 to 61.8, we could have done the same thing but in reverse. Okay, we'll wait until it hits 61.8 and then take it down. And honestly, it'll probably take it down to these highs or even the breakout here. So let's see. And this is just a retest and watch it rejected again. So
Oh, I look. I'm thinking it's gonna break past it. To
it's
be
gonna
honest,
break
and then
past it.
that's what I'm feeling. I wouldn't be surprised.
Let's see.
Oh, never mind. It definitely emmed out there.
Hmm.
Look at that. Say Head and Shoulders right there.
Boom, there you go.
Spot on HT.
It's interesting because it basically gave you another entry point. It told you, hey, I've rejected at this level. Do you wanna enter again? Do you wanna try again? And then some people were like, oh nah, it's gonna break out, but it decided to reject again. And I want to see whether it hits this Wyckoff, this one here, right in the middle. Let's see. Boom.
Ooh.
Yeah. And it's gonna reverse off that. Yeah. So,
Oh,
oh!
look at you, Mr. Houdini.
And this is another one where it's actually testing again. Like it did up here. It's going to test the Wyckoff check. I would say this is a 50-50 here.
I think it's gonna break down.
You're gonna break down lower. Maybe test this
Yeah,
here.
yeah, it's gonna go
Yeah.
lower.
Yeah. Let's see. Okay, I'm assuming. So Danny's seeing that it's gonna go lower. I'm thinking it's gonna test this again and go up. Let's see.
And guys, you know that's the best part about trading is we're seeing the same thing, but we're thinking completely different things. You want to keep playing that while we're
Yeah.
just going through. But yeah, like that's the beauty about this is that, you know, you can give someone the exact same image and get completely different responses. Yeah, because it just looked like a, you know, multiple A, B, C, Ds to the downside. Yep, there you go.
Mm. Yep. There you go. Nice call. Great call.
Now you can see the momentum shifting here,
Look at this.
and you can see the coil now.
This would. This is where I would enter for a long. Why?
All right.
Low. We're getting downward movement in price, but MACD is going up, and it confirms. Boom.
Does it? Does it confirm? Where does it confirm?
Does it not confirm here?
Are you sure?
I don't like when you do this. I feel like I'm in school again. um, I would say so, yes.
How do you confirm MACD? Let's go back to basics.
You're gonna have to tell me, man.
What's the well? Look, I know you're running low on sleep, but so
I've had 3
basically,
hours of sleep, guys. 3 hours of sleep.
where's the midpoint?
Of?
The MACD of the W.
Aha. So boom, boom,
So
boom,
you got
boom. So
there you
this
go.
would be the midpoint.
Have we gone past the midpoint?
No, we have not.
So do we have a confirmed MACD divergence?
We do not. You're right. I apologize.
But at the same time, you know, you don't have to get that's the beauty about trading is you don't have to follow the rules sometimes. As
Mm.
long as you follow your own rules and, you know, you're strict on your own settings, then, you know, you can still make it. And that's why you can get you can get scenarios where, like, back in the .com days where you get monkeys throwing darts, you know, at a board to buy or sell, and they'll outperform, you know, hedge fund managers and stuff.
Exactly.
That can happen as long as you got set rules.
I'm the monkey here, guys.
Well, you're a damn smart monkey.
Um, another reason why
Well,
I would like this trade is if
well,
you
let's
look
put
at
it
the,
on. Strap it on.
let me just tell the good people why. Because
Sure.
look at here, the RSI. Ugh, the RSI goes low, higher low, higher low, and then in between this higher low, W, W,
Ooh, that's a very good spot. It's an
W.
RSI div.
It's an RSI div together with a potential MACD div. So I would enter at this level. So I would have entered technically here. I would
That's a
have.
nice inverse head and shoulders as well.
That's, dude, I did not even see it until you said it. Boom. That's beautiful. And I would risk it to this 61.8 level, and I would take it up to, where were we before this? No. So I would take it up to test the old high. There we are. Let's see what happens. This is too slow.
Yeah, running on the daily here, but you know, we'll see what happens.
Oh no, doesn't look that great. Oh, never
I
mind.
mean, it looked ugly, but it turned up for you.
I mean, we.
Ooh.
Yikes.
Ooh, taking heat. Taking heat.
Come on. Nice W's. Nice W's. You know what I'm seeing? I'm seeing here either an A, B, C, D? Nah,
Nah.
nah,
That's
no.
wishful thinking.
That's
I'm
wishful
afraid.
thinking here. Yeah, that's wishful thinking.
I'm seeing M's and I'm not liking it here.
Yep, yep.
So,
Ah, there
there you
you
go.
go. So that
And look, guys,
MACD, that
let's
MACD,
let's stress. Let me stress for you how that potential MACD div turned into a what? Turned into a MACD div on the other
other
side, which was
side. Exactly.
so
Yep.
guys. That's why you gotta wait for those MACD divs.
They're so powerful, man. They're so powerful. And together with the RSI, if it was a MACD div, confirmed with an RSI div, I mean, it's
Well, let that goes into confluence, and you weren't getting it. So you were kind of fighting the upstream.
mm,
You were looking for things. Think about it like a bias. You were looking for something that wasn't there. You were just trying to confirm what you were thinking
yeah,
instead of looking at the facts.
yeah,
So, at the same time, just be mindful of that too. Don't try and force it because it looked at the time, it looked like you were trying to force that trade
mm. Hey,
because you were
that's
seeing potential MACD divs. You got the confirmed RSI div, but you didn't get anything else other than that.
exactly. Yeah.
So at
And
that point, you got to be careful because if you're trying to look for things where things aren't there, you're not going to find anything else. But if you look for one thing and then something else aligns with it, and then something else aligns with it, and then something else aligns with it, then you're going, okay, well the stars have aligned there. Let's rock and roll.
yeah, yeah. Um, hey man, that's the life of a trader, right? Sometimes
That's it.
you try to force a trade, and sometimes you don't even care, and you just throw on a trade because you know what? Um, I'm getting good signals, and it works out. Other times you're like forcing yourself. No, this looks good. I can feel it. I can feel it. Yada yada yada. And this is hey, we all get
Well,
dragged into
we're all
this,
learning. We're all
you know.
learning as well. We're not perfect.
Exactly. So this is just another example. You win some, you lose some, but the name of the game is to come back another day and still have money to play.
That's it.
So just don't, bet the house on just one trade, Be smart with it. Don't be, risk 5% or 10%. Nothing too crazy. With that being said, guys, we've been going on for about an hour. Actually longer than I expected, and I am knackered. I need sleep. So thank you, Danny, for joining. Thank you for that beautiful insight and the educational walkthrough that you gave us all with the
Hey, no
MACD and
worries.
everything.
Well, look, I'm learning from what I'm saying myself because it's hard to put into practice. It's easy to talk the talk, but it's hard to walk the walk, man.
Yeah. Well, hey, kudos to you for not only teaching me but teaching the great people. Um, yeah, man, we're all in this together, right? Although we all see something different, like we said, we're all technically in the same game. We're trying to achieve the same goal. So, thank you all for joining. Please like, share, follow our socials: YouTube, Twitter, Instagram, TikTok. Um, give us some suggestions as to what you would like to see. Um, any other type of content, more entertainment, more educational. Let us know, man. We'll be back here tomorrow, streaming every day. We're on that hustle, so share it with a friend if you guys are interested in the trading world. Come learn with us. Get ready. This is the time to learn and build your knowledge before the bull run, because trust me, you want to be around and have that knowledge during the bull run. So, yeah, man, thank you everyone. Thank you for listening. Thank you for tuning in. So, from me and Danny,
Peace.
peace.